Hello, everyone, and thank you for joining in Wealth Conversations with Gaitha. My name is Gaitha, and I run a company called Regal Africa, where we help our clients create wealth. So today we'll be talking about wealth creation or creating wealth in East Africa, which is a subject matter that I'm very passionate about. Today we have an expert from one of the licensed fund managers here in Kenya who covers East Africa. Now, the reason why I started this wealth conversations with Gaitha, which started a couple months ago, is because I started getting a lot of questions from people around the world, here in Nairobi, in Africa, in the US, and everyone was really concerned about, oh my God, with all this crisis, what should I be doing in regards to saving? What should I be doing in regards to investing? How do I grow and manage your wealth? And because I was getting all these questions from all these different people, I thought this would be a really good time for us to start having conversations and really talk about what are the things that you need to do to create wealth. And so this is our 9th episode, so I'm very excited. And all through this journey of having this different conversation and answering different people, the main questions that they have, we've really talked about different things, from actually understanding what the wealth formula is, understanding what assets you should be investing in. We've actually been able to focus on different asset classes, how you should be investing, really talking about business profits, investment income. And so today we actually decided that we're really going to focus on creating wealth in East Africa. And I will be introducing our speaker in just a short while. So today I'm very excited to go ahead and introduce Gaurang Chavda. He's the head of distribution at Sanlam Investment East Africa. And I met him a couple of years ago when he was working for also another licensed fund manager. And he's a young person in the industry. And so when I was thinking about creating wealth in East Africa, I thought to actually speak to somebody who actually is in the industry, working for a company that looks at the region, so that he could give us insights on what are the best things we need to be doing to create wealth. So I really would like all of you to really pay attention to what Gaurang has to say. And if you have any questions, because usually the last 30 minutes of the show, we actually answer any questions that you may have. If you're on Zoom, welcome. You can actually put the questions on the chat so that he will be able to answer. We also have other people who just log in on Facebook, and we will be glad to answer your questions. I really want to go on Facebook right now to see the people who've logged in. And usually because we have a global audience, we have people from all around the world, then I would encourage people, if you are not in Nairobi, just go ahead and put your name and the country that you're from, and then you can be able to start watching. You can be able to let us know. And then also, if you have any questions, just make sure that you put them on the comment section so that Gaurang can be able to answer those questions for you. So thank you again for watching Wealth Conversations with Gaitha, and I hope you enjoy the conversations today. All right, so I will start off by just introducing our speaker and just reading his bio. So Gaurang Chavda is the head of distribution, Sanlam Investment East Africa Limited. Gaurang's experience within the investment industry ranges from working in the United Kingdom for an investment firm called Strategy Insights. He also worked with Winton Investment, which was part of Chase Bank Group. So all of you who are in Kenya, you remember Chase Bank Group. And he was dealing in offshore investments and really specialized in Forex and commodity trading. Gaurang also served as the head of private wealth management at Titan Investment Management, where he specialized in distribution of real estate and fixed income solutions. Gaurang holds a BA honors in business studies from University of Wales Institute, Cardiff, and he's also a CFA level 2 candidate. So thank you very much, Gaurang. And I know I gave an introduction, but maybe there's something I missed there. Maybe you could tell us a little bit about you and how you joined the investment world, because of course you are a young person and we usually have different young people who join us. So I guess I will just start off with my first question. As a young person who's currently investing, can you maybe share with us your wealth creation story and how you learned about investing?
Thanks so much, and it's great to be part of this conversations today. Obviously, you've said a lot in terms of what I have done. In fact, it took me down to a trip down the memory lane, in fact, of where I really started from. So I thought the best way of obviously taking this conversation and obviously telling people how can you really grow and how can you really save or how can you really invest would obviously be a basic, just a rewind button of how have people done it and how are you able to do it. What I always like to tell a number of investors or any friends or any family at the end of the day is investing is no rocket science. What I like to say is as long as you are disciplined, as long as you are well researched, well informed in terms of what you are doing, you're going to be on the right track. And what you really need is someone to be next to you, whether that's a qualified investment advisor or financial advisor, just to guide you on the processes involved. And the only reason I would say this is I think traditionally we have this mentality of saying whatever my neighbor does is the best investment advice. So I'd give a brilliant example like in Kenya. If I saw my neighbor put up a five-story house, I would say, hang on, I think that works more better even for me. But there are a lot of things that keep on getting into the picture. You realize you've not factored in. So where I say is this is where our investment advisor normally comes into action. And I think during this whole part of conversation, what we want to try to do is try expose you to what other investment vehicles are out there that you can obviously access, and more importantly, how can you grow your wealth? And also bearing in mind, I know a lot of you would obviously have questions of we're in a pandemic environment. How am I going to do this when I am barely struggling? So you'd be surprised with a lot of things that are currently happening right now, and how you can take it forward. So if you don't mind, and let me just for the just as a brief overview for everyone to understand where I started off and where I am right now, and then for us to get an idea of how we can grow in wealth. Could I just introduce myself once again in terms of how the journey has been like in the industry and what it has helped, obviously.
Yeah, that would be really great. So go ahead and tell us your story.
Yeah, so yeah, obviously, first thing I'd like to start is obviously I was not born bald. I had a long lock of hair. I used to have hair up to here. And what obviously happened is when I entered the industry, you realize you really want to make the right decision whenever you're investing. And anytime you make a bad decision, what happens is your hair start falling off. So I've reached a place where I know I'm not going to make any bad decisions because there's nothing left to be taken off my head. So I know I'm on the right track in terms of what I want to achieve. So like I mentioned, obviously my journey began in United Kingdom. I worked as an investment banker over there, and that's where my solid ground was. It was a very fascinating environment in terms of how investments are carried out over there. But you know what? They always say home is home. And I decided one day it was enough time and returned back to Kenya to see what other opportunities would be existing, whether it's as an investor or even as a investment professional. And I think the biggest shocks that I started realizing amongst local investors was one, there's there's a scholar who once quoted a very famous line saying, life is about simple thinking and high living. And that's what Kenyans do. But what exactly we're supposed to do is, why don't you live very simple and think very highly? And I'll give you a brilliant explanation of how people have really misused certain ideas, all right? According to local investors, our basic investment strategy is quite simple. Once we get paid a salary or once we get any income, what we're going to do is, all right, I have my salary in my hand. Next thing would be 40% of my rent I'd pay off. The next 20% would obviously be in wining, dining, and entertainment. The next 10, I'd obviously have some miscellaneous that pops up. And if there's anything left, I might just put that under the pillow, which I would categorize as a savings. And I go back to the same scholar who said, you need to strategize your life whereby you're living very simple, but thinking very highly. And that's where I realized my mentality had obviously been very different because of a mindset of how investments normally happen, whereby the first thing you would do is when you get paid is you want to save the first thing. The rest of the aspects of rental, miscellaneous, wining, dining, shopping, all of those could come later on. So you realize it was a mentality set in terms of getting people to adapt to such a change. But once people are very active in realizing, hang on, I've been doing something wrong my whole life. Tend to save right at the end of when my old money is finished and I save 5%. And even what you realize, even when people were saving that 5% from a number of surveys we did, or we're just talking to people, that 5%, if the money is lying under the pillow or it's just lying in your pocket, when Friday or Saturday hooray kicks in, you realize, hang on, that money quickly just got blew over alcohol or basic nyamachoma. So it's a set of mentality that we had to train people of. For you to be able to save or for you to be able to grow your wealth, you need to be able to get your basic steps right, which had to stop from your general idea of saying salary in, expenses, miscellaneous, and then finally save. So what we came up with is we said, why don't you stop this habit? And what happens is as soon as you get paid, your next step should be savings. Now, I know a lot of people would ask, is there a rule of thumb in terms of what am I supposed to save or what is the right amount? You'll be realized there is no wrong or right answer. For a starter, even 5% or 10% or even 15% of your salary could be saved. But the important aspect is that you've brought the savings aspect right after you've earned your salary, or if you're running a business, whatever profits you have made. What you have to do is we realized a human error. Like I'll give you an example, even though, and you might have made a decision of saying, I was going to save X amount of money. When the time came every month and that process was not automated and you had to decide what to do it, I would guarantee you 70% of respondents would normally just say, all right, I'll save maybe next month. So what we normally recommend to a lot of young investors, young people entering who are just about to create their wealth is do the salary, do an automation, which is normally what we say a direct debit or a standing order that you have in place. Because the minute that salary hits your account, you want a certain amount goes towards a savings that you have literally made over the years. So that obviously is your bulk part of it. Where do you start off? Is where I say you need to get some money before you can make more money on it. And for you to make that money, it starts by you being able to get yourself organized and just be able to execute yourself. And that's why right at the start I said there is no rocket science of how this could be done. As long as you're following the right steps in terms of where you want to get to, this tends to become a more easy decision later on. So it's a step in a process. And how do a lot of people compare when they're doing such investments? You realize if you had to start off investing at a young age. So I'll give you I started saving, my first salary was around at the age of 18. And ever since that, I've had a standing order in my account that a certain amount must go towards an investment I'm making or towards a saving I'm making, which is an automated process that you're rightfully doing. So I think the first step of wealth creation is about creating that automated saving process whereby you're able to do it on your own.
Okay. Well, thank you very much, because you've actually said very many things and I agree with all of them. I think most of them. It's something that I've told everybody to do. We actually have a wealth book where we talk about 8 steps to actually creating wealth. And the big thing around that is really about investing, understanding your assets. I like the fact that you focused on discipline. Discipline is very critical, but we all know, if you don't have it automated, like you said, then we have a tendency of saying, I'll do it tomorrow or next month. So
Yes.
I really appreciate you really saying that is actually the focus. You also mentioned starting early. I always tell a lot of people you want to start early because time is your friend, and we all know about the magic about compound interest. The other thing you talked about was professional money managers. It's really good because if you're not knowledgeable, you really, really want to think about that. I've been really speaking here in the wealth conversations with Gaitha about understanding, getting the wealth knowledge that helps you make the right financial decision. And like you said, a lot of people, and the reason we are a lot of people are in trouble right now because of this crisis, is people didn't even start with the simple good habits of saving, right? So if you didn't have a savings immediately the crisis happened, then you're in a very tough place. But at least if you had at least 3 months, 6 months of your monthly expenses, then yes, it will be still tight, but at least you will not have any problems. So, but I do have to say something before we go to the next question. For all of you who are listening, either you're on Zoom or I see a couple of people on Facebook, it is good as you're informed about doing automatic savings, either through direct deposit or through a checkoff system or a standing order with your bank. But one of the things at Regal Africa we've been doing for our clients who are in business, and you can ask if you're an employee or if you're in business, you can actually do that for your employees, where you can actually tell them, just like the same way they do automatic savings into a SACCO, you can actually do an automatic savings into like a money market fund. So if you want more information about that, then let us know and we will definitely be able to assist you with that. And also Sanlam is one of the partners that we work with in regards to being one of the 8 licensed fund managers who are really doing a great job in Kenya. So thank you for that information. All right, so the next question really is around Sanlam and what you guys are doing there. So Sanlam is a Pan-African brand, and of course you're the head of distribution there, so you know a lot more about what it is that you're doing in the East African region. Can you share with the audience about the best investment options for East Africans and how they can invest through Sanlam?
Right. So obviously, Sanlam's we are the largest fund manager in East Africa. We currently manage about 300 billion Kenya shillings, which is more or less about 3 billion Kenya shillings. So, and obviously, I only like to say this: it's not money we woke up overnight with. It's something we've built up over the years, and it's been the story of our lives for the last 2 decades of how the business has grown and how people's money has grown along the same line. And the only reason we like to say this is we realize that investors want to be associated with a company that has grown over the years, rather than one that just shot up the other day. So in terms of what I would say is, what are the right options of investing? So this is a tricky one. The only reason I'd say this is every investor tends to be a different person from the rest. And the only reason this makes sense is someone could be the age of 40, someone could be the age of 50, someone could be at 20. And therefore, when we normally have to have a financial sit down with someone, try to evaluate their risk profile or their return profile, and just see, hang on, okay, what's your income? Do you have any family dependents? Do you have any kids? Do you have any savings that you've made over the years? So there are quite a number of factors that obviously go into something before you can just say, hang on here, why don't you try this particular thing? So I would say I would be taking the question backwards, and for people who would want to invest, obviously it starts of us evaluating what's your current profile. Because there are no products that we just pick out from the shelf and say, here, catch this one. It makes more sense. But it has to be based on people's age, where they are currently in their life. And I'll give you a brilliant example of how people normally do it. So we've realized a lot of younger generations, people who are within the age of 20 to 30 to around 35, 40 as well, would prefer investing into stocks simply because they have the ability and willingness to be able to accept some level of risk. And that is why they would be inclined to invest, saying, let me get into an equity fund, or let me buy some stocks directly, whether maybe it's through your CDS account, through your brokers, or maybe it's through a fund manager or a broker. That's what we realize a lot of younger generation do. But that said, it's people who are yet willing to accept and take some level of risk. Realize people who normally start passing the age of around 50 onwards, you want to be that kind of a person whereby I don't want to see my 100 bob or 1,000 bob go below 1,000 at any given moment of time. So what they would obviously be advocating for would be fixed income investments whereby people know their capital is preserved, at the same time growing and earning them some substantial rate of return. So the real answer to this, and would be it's based on where you are currently on your age cycle, and based on other factors which could affect a major decision on that particular age cycle. So I could give you a brilliant example. I'm just about 30. The only risk I've not taken so far in my life is I've not got married, and which allows me to be able to invest more because I'm saving a lot of time and money is what I'd like to say for a better growth. Someone at maybe at the age of 20 might have, or 25 might have maybe 2 or 3 kids, and all of a sudden his priorities change, whereby he wants to make sure that he's creating enough savings or wealth for his kids. So their investment plan would obviously be different from mine. And maybe someone who is just retired right now, who's in the age of 60, you'd not want to go and tell them, hey, why don't you do some investment into stocks? So there are a lot of investments out there, and I think it would just make sense for me to tell you what investments are out there. But before you pick any of them, you should obviously do them with together holding your hand with a financial or investment advisor so that they can guide you, which would be a better decision. So in terms of what options are obviously there in the East African market, I'll just give you a brief overview is one, we have something we call fixed income investments. Fixed income investments are something like your government treasury bills or government bonds. How for me to explain this better, it's just like IOU note. The government comes and says, I want to borrow 100 shillings, and tomorrow and says, I'll give you 100, and the government says, for every 100 you give me, I will give you 7 shillings or 10 shillings every unit. That's what we term as IOU note, but it's issued by the government. The beauty about government securities, they're backed by the Central Bank of Kenya, the capital preserved at the end of the day. The second asset class where people, younger generation, and a lot of the entrepreneurs we realize take action is our equity market, which we term as stocks. This would be any company that is listed on the stock exchange, whether that's in Tanzania, Uganda, or Kenya as well. How people could obviously buy through stocks is normally done through, like I mentioned earlier on, with the CDS account or through brokers as well. The third asset class we normally explain to people, which I believe Kenyans are brilliant when it comes to this, it's real estate. I'm pretty sure most of us or one of our relatives obviously has these assets at one given point of time. And obviously you realize there's 3 big asset classes, which is you have your fixed income, your equities, and real estate. So it now becomes a jargon or a scenario of how do I spread my risk so that I know I have something bit of across the spectrum as well. So it's about creating the right portfolio for you based on what your risk and return profile looks like. And then you're able to say, fine, I'm taking the next step ahead, whereby I did step 1, which is saving. Step 2 is executing, whereby where can you invest? But once again, you'd have to get a financial or investment advisor. And for most of you, I think Anne would really be in a great position to advise you based on these aspects. Where are you able to allocate your investments more or less at such a time?
All right. Thank you for that. I agree again. You mentioned that when people ask what are the best investment, I always tell them it depends, right? Because everybody is definitely different. So I like the fact that you actually articulated that, and also the different asset classes with fixed income, equities, or real estate. And really, again, age depends. Is a big factor, because are you willing to take the risk? Are you not? How much money you can invest in is also a factor. The time horizon when you need the money or not is a factor. As you mentioned, you're young, you can take all these risks and you're thinking long term. So your investment portfolio will be very different from someone who's probably 40s, who is married, who has kids, or someone in their 60s. Just before I go to the next question, when I was reading your bio, you mentioned that you've actually worked in different investment companies outside Sanlam, and you worked in forex commodity trading, which is very different from the usual traditional asset classes that we know. Could you just maybe share a little bit about forex and commodity trading and what people be in Kenya or in the diaspora would need to know if they want to go into that space of investing in those asset classes?
Yeah, so I'll just say, I'll start off by saying, in my opinion, next thing, I don't want someone to put a legal case on me saying you advised me to do it. But in my opinion, I
Yes.
normally like to say forex and commodity trading it appears very lucrative. It's just because of the ads a lot of people see, whereby it's enticing you to get into it. Just like a supermarket at the end of the day. But what people have to notice, everything has its pros and cons. So what we normally recommend to people about forex trading is for you to be able to understand what happens in a stock market, or what happens in the forex market, or what's happening between the euro dollar, GBP, pound, a number of currencies and cross pairings, and even with commodities, you have to be able to understand how the markets really work. How do certain aspects of news affect such information? Because if you don't have a clue of this, I don't know if it's wise to say that you're just technically taking a bet, that you're expecting something to go along the same line. And the biggest risk then comes is forex trading has what we normally term as leverage, whereby there are higher chances of you losing a big substantial amount of money within a matter of minutes. So I would say you really need to have detailed knowledge and really need to know what you're doing before you get into it. Otherwise, you might just see the market taking you on a ride along with you very quickly. So it is what we term as a very high risk investment, simply because of the at any given moment volatility and leverage can also swing on your way or even against. And if it's against, I assure you, you do not want to be seated on that spectrum of the end as well. And therefore, that's why I started off by telling people, before you do any investment, please bear in mind 100 reasons of why you're going to do it. So your age, your family dependence, your salary, do you have people who you're supporting at the end of the day? Have you burnt your fingers in any other investments? So there are a number of things you have to look at this before you wake up and say, I even want to do a fixed income, or even I want to do some equities around to buy a couple somewhere over there. So it comes back to yourself being able to document all of this and say, all right, this is where I am currently in my life. This is where I want to get. How do I get here? Bearing in mind all of these other factors. So, and that's why I would say you could have done the most brilliant financial plan of how you're going to save 20% every month. And when you came to executing it, you just made one tiny error, and all of that could have just been swept away. So whether it's equities, whether it's fixed income, real estate, or any alternative asset classes that are in the market, thorough research. And once again, I say thorough research on your own, and listen as much as you can to people who have been in the investment field, who are the experts, and they'll be able to guide you on the best way ahead, at least.
Okay, great. So wealth knowledge, investment knowledge, you have to do research or get a professional to help you, because I mean, all that glitters is not gold. Some of these things like forex, commodity trading, equities, they're very high risk, they're very volatile, but as they say, no risk, no return. But I always tell people, are you willing to take that risk? Or do you have the ability to take that risk, right? So
Yes.
the wealthy of the wealthy can be able to take this risk, because maybe if they lose $1 million, that's no problem. But are you able to do that? So you have to work with somebody who will be able to actually guide you. So thank you for that. We do have a few people on Facebook that I see who are watching from the diaspora, like I mentioned. And really, the question that I would have for you is, in this case, for example, Sanlam, or maybe you can think about the investment industry in totality. what are the best investment options for people who are in the diaspora? So they are Kenyans, they live outside the country, they want to get the great returns in Kenya, in Africa, in East Africa. What would you advise them to do, and what options should the diaspora be looking at? And also, if you're on Facebook and you have any specific question, then go ahead and just put the question on the comments, and Gaurang will be able to assist you, give you guidance about that. But maybe go ahead and just answer that. Diaspora.
Thanks. So I think best place way to start off from diaspora. It's like diaspora realize you're, take an example, you're in a movie theater and you're just seated watching a movie, which is Kenya technically, and you really want to get into that movie. So how do you get there? So I would say our two industries, Capital Markets Authority, have become very swift in terms of how they can be able to get a number of diasporas to invest back home at the end of the day, and they have continuing measures of how to make the process become very easy at the part of it. What we've realized from experience and is a lot of diaspora people who normally tend to invest have a certain set of risk profile. I would really like to put it, and the only reason I would say this is obviously 10-15 years ago everyone had one dream, was people to just buy a plot, and then slowly you realize, hang on, maybe the title was not correct, or someone else even has another title or something, and something always used to happen before. And what we realized is as things passed by, diaspora became more smart, more knowledgeable about how decisions are really made, and which has been a really good trend. And what we've noticed is of lately diaspora investors have been opting to do investments whereby, one, you have access to your money, which is the most important critical thing, which is what we normally term as liquidity. And it's a simple rule of thumb, whereby we keep on telling people cash is king. So whichever investment you're doing and you have access to your money, if another opportunity came, you might just jump around the boat and jump into it. So we realize a lot of diaspora love investments whereby they're easily able to get access to their money. But more importantly, at the same time, is we have there's a small bandwidth of people who would want to make sure that the money they initially start investing, they do not want to take a risk on their capital. They would first want to be taken by a wealth manager or the professional money managers and tell them, show me how you're going to grow my 100 bob. If I am happy with this 100, then let us walk the journey of saying, I think I want to do another investment in another asset class. So we realized people want to do, initially a lot of them would start doing fixed income investments just to see how they're able to perform. And later on, they start transitioning into investing into equity funds or balanced funds. So it's a progressional thing that we've seen people do, which is quite a big amount at the end of the day. And if you look at how much diasporas contribute to Kenyan economy, you'd realize it's one of the biggest inflows we get. So basing on that number and how people normally invest, I think it's only fair for me to just tell them, this is what we've noticed a lot of diasporas doing, whereby two key factors they normally look out for is, one, liquidity, and second is obviously to take a step at a time. And that's why we normally see them investing into fixed income initially, and then later on when they get more comfortable, whereby you think you have reached the interval of the movie, then you say, all right, hang on, let me now switch the gears up, more or less. So that's what we've noticed over the years, and I think it's something that normally happens on a regular basis. Even when we receive a lot of diaspora clients, it's normally the same process we've realized happening.
Okay. Thank you for that. I really got what you said. The diaspora become more sophisticated, so they're moving away from plots, which is what most people are investing in. But then they're still looking for things whereby they need to be able to trust, right? And so they are dipping in a little bit, and but they're also cautious. Cash is king, so liquidity. So we're really talking about like the money markets or maybe the fixed income, so they can access their funds when they need to really get good deals in the market. So really great for that. So all of you who are in the diaspora, you've heard what Gaurang has said. So if you're really interested in investing, then you can always reach out to us at Regal Africa. We will be able to facilitate an investment through Sanlam because they're licensed by the Capital Markets Authority, and we would get someone there to actually show you the different options that they may have. They have unit trust, if you're interested in the equity market, they have equity funds, they have money market funds, they have bond funds, they have segregated funds. Basically, as you heard there, they have 300 billion Kenyan shilling funds under management. So they really have been doing this for a while. They have a track record. They are Pan-African brand. So if you're interested in investing, go ahead and let us know. Before I go to the next question, I do see a few questions coming in. So I'll go ahead and read some of them out on Facebook. And some of you who are on Zoom, go ahead and just put your question on the chat, because we really want to answer your questions. Remember, this is a conversation. So yes, we're having a conversation here with Garang, but I'd also like to hear your questions so that by the time you get off the show, he's been able to answer any questions that you may have. So I have a question here. Actually, it's a comment. Dr. Lucy is saying that the diaspora bringing 300 billion in remittances. That's a whole lot of money. And that's annually, right? Right? So what they send is equivalent to what Sanlam is actually investing in East Africa. And the question is, how do we get them to put some of the money to be invested? So also the fund managers need to be able to let the diaspora know that they are in the market to assist them to make the best decision. So the diaspora is ready, they just need to be able to find the right investment options there. I do have Cindy who says she's loving the conversation. Thank you, Cindy, for joining in. Dr. Lucy says great information, we appreciate you. I also see a few people who have joined in, Kemunto, Dindi, and Louise is watching, Joe is also watching, and I see Diana watching. So there are a couple of people watching on Facebook, and they are loving this conversation. Again, if you have any questions, please write them on the comments. We really want to be able to answer these questions for you. So now the next question that I have for you is this. So for a lot of retail investors, or what we call retail investors, which is just all of us, right? Many of us are very busy, right? And so we're busy working in our business, we're busy working in companies, we're employed. And so what we are looking for is professional money managers. What product would you advise them to invest to get best returns? I know, Ala, you alluded that you can't really say, but I share what the question really is I don't have the time to make the right decision. I want to trust that you make the right decisions for me, because I have worked hard for my money, but I want to be able to place those funds with a professional money manager. How would you advise me, or what options do I have in East Africa to invest?
Yeah, so I think I just want to pick off where you left the word called trust, which is what I normally say starts off anywhere. Like if I was admitted to the hospital and I am being given an injection, I am not going to tell the doctor, what if you give me 3 all of a sudden? Because I'd obviously trust them to make the best decision. And I know this might become a repetitive and a very boring song by the end. Time we finish this is where I keep on telling people, make sure you have an investment advisor guiding you, which is the most important aspect where you're going to go invest at the end of the day. That makes the biggest difference of whether you invest into any asset class. It's your investment advisor who would show you the right road to it. So I think what I'll just drop is a few hints of what the current markets are doing, at least for the audience to see what kind of returns are they seeing right now, and what do they feel is a good opinion. So for what, like the first asset class we spoke about, fixed income securities, these are treasury bills and bonds, like I mentioned. And for me, just to give you an overview of where they're currently, what their current returns are like right now. So in Kenya, we have something we call a 364-day treasury bill, which is something issued by the government. As of last week, the return for you to hold a treasury bill for a year was just around 8.2%. That bearing in mind, I think it's a very competitive rate of return CBK obviously is offering out there. And if you really look at what your other fixed income assets normally have, it's normally depending in just more or less the range of 8 to 9.5% roughly. So that's what investments are currently at in the fixed income market. In terms of equities, so we obviously had a very a roller coaster year to the start of it. We had the COVID situation, which obviously affected a number of stock companies that came down. But we're starting to see a number of securities which look more undervalued. And so you've got two sides of the spectrum whereby now the equities will start getting more attractive as we go on later on. And you've also got your fixed income securities, which give you a good rate of return, access to your money, and capital preservation. So I don't know, like once again, don't get me wrong, I can't say the answer is A, B, or C. I just want to give you an overview of where the markets are for you to then be able to judge where do you feel you fit right once your investment advisor has carefully selected the best asset for you. Sorry, I seem to be giving very different answers as what people were expecting in terms of if someone asked me if I had guessed what would I take, I guess the answer would be But in my case, when someone normally asks such questions, I can't jump ahead and just tell you the answer. It's not how professional fund managers normally give you answers as.
Yeah. And I agree with that because a lot of people ask me the same thing. I say, depends. And I always tell you, if you ask somebody, where do I invest? And they immediately tell you, go here. They're salespeople. Nothing wrong with salespeople, but they're selling you a product because a good advisor actually understands. They listen to what you need and they're able to offer you the right product based on your situation. But if someone just tells you this is the best option, then really they don't understand where you're coming from. They might be advising you or guiding you the wrong way. So people might not want to hear that, but that's the right thing. And also one of the things you've emphasized here is really working with professionals. I always tell people, it's like when you're sick, you can either self-medicate, or you go to a doctor, right? So people go to a doctor because they are sick. So the reason you're going to a fund manager is because you want a professional to actually do all these things, ask the right questions so that then now you can make the right decisions. And actually having a financial plan, understanding your risk tolerance, understanding your vision for your wealth creation. That's how you're going to be able to then invest in the right thing and then diversify your portfolio. So thank you for your answers. And I know a lot of people are going to learn from this, because remember, the whole essence of Wealth Conversations with Gaitha is really wealth knowledge, so that people can think about things, understand, ask the right questions, and then we go from there. So now earlier we talked about Sanlam being in East Africa, but it's a pan-African brand. And you've been focusing really around Kenya and the options that are there. But what I would like you to maybe share with us, because like I mentioned, there are people here who are in Kenya, other people are in Africa, other people are in the diaspora around the world. Can you tell us, for example, Sanlam, what options for investing are there in the East African market, and what should people be looking to invest outside Kenya?
All right. So just obviously taking it a step behind. Sanlam is obviously a global brand. In Africa itself, it's spread across 33 countries, but over the years it has grown. It has grown over the years in Europe, Middle East, Australasia, and also US at the end of the day. As a group, it's much at a larger scale. It currently manages over $61 billion. That's as a group. So just coming back to the question of what other investment options would be available in terms of where could people invest overseas at the Sanlam. Obviously, this is something now we would now work hand in hand with you, your financial advisor, and just link you up with the right professional fund manager in that particular country under Sanlam to guide you. So I don't want to tell you what the right investment in US would be, but I'm pretty sure Sanlam USA would give you the best answer for that. For East Africa, this is where we specialize, and that's why I'm able to give you my advice. And the only reason I normally like to say this is, If you've made pizza your whole lifespan and someone told you tomorrow, hey, can you cut me chips? You might start hesitating. So you rather let the guy who made pizza make you pizza and the guy who made you chips continue making you chips. So if you don't mind, I'm more comfortable telling you much about East Africa, but when it comes to a global aspect, I think the representative offices would be much better advised to take it from there. So we have offices across the globe for Sanlam, and I'm sure at any given moment of time, if you'd contact them, and they would obviously be willing to walk the journey along with you as well.
Okay. Thank you for that. All right. I do see a few questions coming in on Zoom, but I'll just ask you my last question before we start answering some of these questions. And this is a question that I've been asking everyone who comes on my show. And I really want an answer. And the question, because a lot of people keep asking this, is what do you think is the next big thing in investing? We have had a crisis. It's a new normal. Nobody knows what's going to happen next. Everybody, even in the investment world, for us who've been in this industry for such a long time, we are now going like, oh my God, this new normal is different. I mean, I think the basics remain the same, but I'm quite curious to hear what you think is the next big thing in investing.
Right. So in our quick opinion, we see the markets obviously in investing is now starting to grow in one particular sector, which is just called unit trusts. And obviously this unit trust in Kenya is more or less valued at around 80 billion Kenya shillings. And the reason why in my opinion, I feel this is going to be the future gateway for investors, whether you're investing as an institution, whether you're investing as an individual or a retail or a family, it's just unit trusts, or we normally term them as mutual funds in other countries. But the reason we feel it's the gateway to Kenya right now in terms of growing people's wealth, they're very transparent. Unit trust investments are very transparent. They're easy to access. People normally, even whenever they need their money, they're easy able to get it. And we came back to the same point of how we spoke about liquidity. And the beauty of what I say unit trust normally has is, if I went with my 100,000 to maybe try get a deposit or anything, or try do any investment, I might not really make anything on 100K. But what happens in the unit trust, if I take Anne's 100,000, I put my 100,000, and I put everyone who's on this conversation 100,000 together, the next time when I go to invest this money, I'm investing this money as a pool of money rather than individuals. And therefore, what that gives me is financial muscle to be able to get a better rate of return than what you as an individual would have done, or even as an institution, because I'm able to use my economies of scale in purchasing and get better yields. And this is what we feel is the future gateway to investments, whereby people will obviously want to wake up, look at what's the best unit trust you can invest into, and how can you do it easily without having to worry. If you're a working professional, maybe you're a doctor, maybe you're a lawyer, it is not your daily job to see what's happening in stocks, what is my equity fund doing, or what is fixed income doing, or all of a sudden today the Central Bank of Kenya decided to raise the interest rates or lower the interest rates. What does that mean too? So you want to wake away and say, I don't need to know all of that. It's the same thing if, as a doctor said, now there are 2 new paracetamols in the market. I don't think that would make a concern to me. I would just want a solution. Same thing, we've realized investors are getting, like we mentioned, they're more sophisticated. They're giving you that saying, here, I trust you to make a well-informed decision. You've done this for the last 3 decades, 4 decades. I am comfortable in knowing that you're going to invest this in the right place. And if I had to summarize why I feel, once again, unit trust is the future gateway, it's access, transparency that comes along with it, easy access to information. People can log in on their mobile phones or the internet, look at their accounts, transact on it. So I feel that's the main reason this industry of unit trust is going to grow. And that's where we're seeing a lot of growth that would be happening. Even in such a pandemic environment that we currently are, this is where we think the business would be growing.
Okay. Good. So for all of you out there who are not investing in the unit trust market, you need to start looking into that. I actually believe in the unit trust market just because I always tell people it doesn't matter how much you have, even if it's 1,000 Kenya shillings, you can get it into a unit trust. I know with Sanlam minimum is 2,500, which in the diaspora is $25. You can get an investment account. You can be able to, for example, deposit and withdraw anytime, depending on the kind of fund. And the great thing about the unit trust, like Garang mentioned, it's a collective investment. My money, your money, but it's going to a professional money manager who has the muscle to go out there and negotiate for the best returns for you. So you don't have to do it yourself. You go ahead, make the money, and then have someone make money for you. All right. So thank you for that. And for all of you who are not investing, reach us out at Regal Africa at info@regalafrica.co.ke. We'll be able to then understand exactly what it is that you need, and we can then be able to help you open up an investment account, either with Sanlam or any of the other 8 fund managers that we work with in Kenya. And then you can start being able to invest and start making money and creating wealth in East Africa. All right. So I see a few questions here on Zoom. There's a question from Mary, and she says, what if you're running a business and it's not regular income on a monthly basis? Can you still do an automated saving? So
So,
she's running a business. Yeah, okay.
so I've just seen the question pop up right now. So Mary, my best answer would be if it's a business not giving you monthly income, it doesn't hurt you setting up order saying every quarter something would go because you have to save something. Whether you do it monthly, quarterly, you have to set up something automated that would go out at some moment of time. Obviously, with businesses, when you're an entrepreneur, everyone realizes it's not as easy as what everyone comes and say, no, you have to do it on a monthly basis. That's why I said everyone has a different scenario they're put in. So for you, I would obviously recommend having something that's more quarterly. And if you get a big amount, it doesn't hurt you saying, I'll try cover it up for the first 2 months as well. So I believe that that could easily work, Mary, as well.
Okay. Thank you. I also have an opinion on that because I've been really talking to business people because I also run my own business, and it's challenging because you don't have regular income. But Mary, I'm not too sure what kind of business that you are in, but I always tell business people, if you are actually in business, you're an entrepreneur, you need to make sure that you have a salary for yourself. Whatever that salary is, then you want to then take a percentage of that, minimum of 10%, to then go into savings so that you have at least 3 to 6 months. Now, the only time I would say you might not have regular income is if you're a consultant, right? So if you're a consultant, then you're working for yourself or you're self-employed, then you're not really in per se a business or entrepreneurship, so you don't have stable income coming in every month. So at that time, it would be like now what you've been advised, which is then say, could I then be able to invest quarterly? The other thing I say simply, I'm always talking about you can invest 100 shillings a day. 100 shillings a day in a month, we're talking about 3,000 Kenya shilling, just with 100 bob, right? Which is a dollar. A dollar a day is 3,000 Kenya shillings or $30. So you can be able to invest in that if you're making money. If you're getting any income, you can be able to start saving. And beyond just saving, even for just like in the unit trust, which is very easy, you also want to start thinking about saving for retirement, put it in a pension. And also Sanlam does have pension plans. Maybe Garang, you can talk a little bit about that. I'm not so sure if it's in your insurance section or if it's in your asset management, but also beyond just thinking about saving for emergency investing, you really need to start investing for retirement, which is really long run, and that you can invest with as little in Kenya, with as little as $500, 500 shillings or $5 every month. So maybe you can talk a little bit about pension and what maybe Mary can think about, because she's running a business. So there's emergency saving, there's investing, and then there's pension for retirement.
Yeah, so we normally keep on telling people whichever way you're saving, obviously the vehicle might be different. Some would categorize it, maybe I'm saving through a unit trust. Some would say maybe my employer is putting in 5% of my income or 10%. The only thing that's just moved is just the goalpost. So you're initially doing with a unit trust or doing through a pension, the vehicle still remains a vehicle whereby you're still saving for a greater cause. So yes, the other side of Sanlam Investments Africa also, there is Sanlam Kenya PLC, which is a listed company on the stock exchange. They also would be happy to assist on creating individual pension plans uh, at, at a given point of time, I'd say. Yes. So it all depends on you as an individual, Mary, on when you say, I want to do it, and how we can start executing it more importantly. And like I said, please make investment decisions with professional fund managers so that they're able to guide you on the right track.
Okay. Thank you for that. And also another thing I would say, Mary, there's something I've been talking about for the last 9 sessions of this conversation about workbook, e-workbook that we created at Treasury Africa, and I wrote it. Really, it's an 8-step process. And one of this is about clarity around the different ways to create wealth. And it starts with your assets, but the other one is really about your cash flow management. So what I would advise for you, Mary, is to just really look at what is the income that you're making every month, what are your expenses, and just making sure that even when there's sometimes you have a lot more money than usual, that extra is what now you put into your savings. So by you writing it down and really being very clear about your actual financial picture, then it would be easy for you to then make these decisions. So then if, let's say this month you're not able to, but last month you had a lot more money and you're able to put it into that savings, then it will help you. But it's all about writing it down, understanding your financial picture, and you can do it yourself using the workbook, e-workbook, or you can actually sit down with a wealth advisor who will help you with that. So I hope we answered you, Mary, and thank you for joining into this conversation. Now we have about 5 more minutes, and I see a few questions. Okay. Oh, it's not a question, but it's a comment on Facebook from Peterson Mwangi. Well done, and great show. Thank you, Peterson. Appreciate it, and I hope you really learned something, because the whole essence of this show is wealth knowledge and having conversations with all of you. We have time for just one more question. So if you have any questions, just go ahead and write it down. If not, then we will go ahead and I'll ask Garang to just give us, your last remarks before we end this show. And I really want to thank you for joining us today. So maybe just tell us your last remarks really around creating wealth in East Africa, and also include the diaspora, the Kenyan diaspora, who are also watching us. Mm-hmm.
So yeah, I think my final shot for this brilliant conversation has been that if you haven't started saving, today is not the right day, it was yesterday. So don't delay any much, because every penny that you save going forward is a penny that would have been earned in a particular investment. So make the decision, start executing it, and that's where your roadmap to wealth begins.
Okay, start executing the roadmap to wealth. Okay, thank you for that. And before we end, I just do have to say that it's been really great having these wealth conversations with Gaitha. This is the 9th episode. When I started, I didn't know how it's going to go, but this is the 9th episode, and I'm really excited for everyone who actually joins in every week to actually hear what it is that we're saying. I really said that when I started this show, I wanted people to do 3 things. 1, gain wealth knowledge, which is very important for you to be able to create wealth. The second thing is for you to have a wealth plan, and so that's why we came up with the wealth book, e-workbook, or you can actually have the option of speaking with a wealth advisor. And the third thing is all of you need to have an investment account. So what I'm hoping to get is that by the time you finish listening to this conversation, or if you go back and listen to all the conversations we've been having, you'll actually have increased your wealth knowledge. You've actually purchased the wealth book, e-workbook, and you've started an investment account. And if you want more information or really assistance in doing those 3 things, you can reach us out at info@regalafrica.co.ke, and we will be really glad to assist you with that. I also want to just make how do I say, a notice, not a notice, but I really want to tell all of you that it's been very exciting having these conversations. But like I said, when I started, I didn't know what direction that this would go, but I started it because a lot of people had many questions, and I've had a really lovely time having conversations with all of you and the guests who come in to share with us the expertise. I'm very happy. But then I really made a decision the last couple of weeks in saying that I really wanted to only do 10 sessions. So that means our next episode on July 8th will be the last episodes of Wealth Conversations with Gaitha. So for you who are on the show, I would really like you to come in to listen to the last show that we have so that we can have these conversations. And then what we're going to be doing is starting August, we're going to have business conversations with Gaitha. I'm very passionate about business, and I tell people the way you create wealth is through business profit and investment income. So we've been really talking around investment income, but it's time to now move on into business, because I believe that this crisis is ending and we need to now start making the right decisions in regards to taking the next step to create wealth. So again, thank you for joining. I really appreciate you for joining in. I see Mike saying thanks for the great session. Thank you, Mike. I really appreciate that. Hannah says thank you for such a resourceful session. I appreciate you for joining, Hannah, and I wish you all the best. And we actually have this recording on Facebook, so you can always start a watch party with your family, with your friends, and just start engaging and have this meaningful conversation around wealth creation with your family, with your friends. And also we are on YouTube, so if you're not on Facebook, you can actually subscribe on my YouTube channel, which is Gaitha, and you can get all the recordings that we have on this wealth conversation. And with that, I will say bye-bye. Thank you for joining, and God bless. Thank you. Bye-bye. All right.